Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Today, our webinar title is Uncover the Myth in the Investing World. My name is Shen Chu. I'm the moderator for this session. Now, in investing, there are a lot of myths, and today our speaker will walk you through some of the myths and attempt to debunk some of the myths there and see whether it is based on facts or this is purely based on speculation. All right. But before we go to the main topic, today we are very honored to have invited a special guest from CDRAC to share with us about what CDRAC does and how it can help you to resolve any dispute that you may have with the CDRAC members. Okay, and she is none other than a case manager from CDRAC, Miss Karin. So Karin, good morning. How are you today?
Hello, good morning, everyone. Thank you, Shane. Thanks for inviting me for give a presentation about CDRAC and what we do. I'm very good. I hope that you are good as well.
All right, sure. So you may begin with your brief session.
All right, just let me bring out my presentation slides. Okay. So my name is Karin. I'm a case manager with CDRAC. Just a quick disclaimer. We hold all the rights to this presentation, and then we try to give as much information as possible, but we do not make any guarantee as to the accuracy or completeness of this content in this presentation. Now, I don't think a lot of you have heard CDRAC and who we are, right? Now, CDRAC is an organization formed by the Security Commissions Malaysia, the regulator of the capital market in Malaysia, right? So SC has formed our organization mainly to give investor protection, right? We are formed as an independent and impartial body to help the investor, retail investor, to resolve any capital market related dispute, right? And we are formed by the Security Commissions to make sure that we remain independent. We do not side. We are not biased, right? We do not side any of the member. We do not take side, right? Neither with the claimant or with the member, just to make sure that this is an impartial and independent avenue for both parties to resolve any investment complaint, right? Now, like I mentioned, this is really just for investor protection, right? You can trade in the capital market, and if anything goes wrong, right, and you know that you have an avenue where you can seek redress against the capital market intermediaries, right? Now, many investors would think that, let's say, your provider, the capital market provider or service provider, did something wrong, right? The only resources, the recourse you have is to bring it to court, but that's actually not true. This is what we call alternative dispute resolution or settlement out of court, right? You can lodge a complaint with us, we will investigate, and hopefully we can resolve it here, and not letting, and you don't really have to file the claim at court, right? This is what we call alternative dispute resolution, right? Now, and because we are formed for the investor by the Security Commission, SC has funded our operation, right? So we provide a free service for the retail investor. If your claim amount is below 250,000, right? If it's 250,000 and below, you come to us, lodge a complaint. Our services are free. You don't have to pay anything, right? If your claim amount is more than 250,000, you still can come to us. It's just that there has been, you just have to pay a little bit of fee, right? And our process is more flexible, and it's not a court process, right? It's outside of the court. Now, how can we benefit investor like yourself, right? This is a one-stop center, right? You just have to come to us. You don't have to go to a lot of parties to try to resolve it, right? Just lodge a complaint for us, we investigate and try to resolve it with the bank, right? Or with the capital market provider. Second thing is also, this is like a form of protection. You know that you can trade in the capital market. If anything wrong, you suffer monetary loss, you can still come to us to lodge a complaint, right? And during our process, we also try to explain the capital market to the investor, like to help you better understand what is the product and also what is this capital market, right? And we are all trained for capital market related dispute, right? And most importantly, we are independent and impartial so that you don't have to be afraid that we will be biased or we take the bank salary, the provider salaries that we don't, we are biased or whatnot. You don't really need to be worried about it, right? Now, who can lodge a complaint with us? First thing is it must be individual investor, right? Or a sole proprietor. If you are institutional investor, unfortunately, they can't use our services. But individual investor like yourself, most of the time you can come to us, and your claim must be against a CDREP member. Now, CDREP member, there will be a list in our website, right? Usually would be like your PRS distributor, your investment bank, or your people who buy, who sells you unit trust, right? All these people are CDREP members. Now, your complaint must be related to capital market, product, or services, and claim you must have a monetary loss. So we only look at the monetary loss. If you are looking at disciplinary actions or whatnot, that is not within our jurisdiction, right? And complainant, you must first lodge a complaint with the CDREP member to allow them to do internal investigation, right? If at all they issue a decision to you and that you are not happy with it, then you can bring the complaint to us, right? Or in the event that you lodge a complaint, but it has been a long time that they have not responded to you, you can also lodge a complaint with us. So these are the eligibility criteria. Now, this is in terms of the capital market products and services that we can handle. In first example is securities like shares and warrants. You have derivative, right? Your FCPO, etc. And we have PRS, fund management, and unit trust. Right? If your capital market product fall into any of this, then you can come to us, right? Now, most importantly, how do you lodge a complaint? You can download a claim form from our website, right? And then you just have to put in the relevant supporting documents supporting your complaints, and then you email it to us, and our case manager, like myself, will get in touch with you, get more information, explain to you our process. Just an overview on what do we do, right? How do we resolve a complaint for you? Now, first thing is, after the incident had happened, you suffer monetary loss, you have to first file a complaint with the member to allow them 90 days to do internal investigation. So they should issue a final reply to you informing that decision. If you are not happy with the decision, right, you can lodge a complaint with us. Or let's say you have lodged a complaint, but after 90 days, they have not responded to you, then you can come to us as well, right? After we receive a complaint, we will first go into the first stage called case management, where we will ask both parties for more documents, for information to understand your case better, right? And then if it fulfills the merits criteria, then we will move to mediation. It's where all the parties will sit in the same room, and we will appoint a professional independent mediator to help both parties to negotiate or to discuss, to come up with a settlement. And there is no pressure, right? It's entirely voluntary that if the member decide to make you an offer, you feel free to accept or reject it, right? There's no pressure. If mediation is successful, parties manage to reach a settlement, we will record the settlement, right, agreement. Now, if it's not successful, we will go to adjudication, where we will appoint an adjudicator who is an independent body from our panel as well, right? They are all professionals from the legal professions, right? And our parties can, we have to give a submission, there will be a hearing, right? And the adjudicator will make a decision. And then the claimant can decide whether to accept or reject it, right? If for a claim below 250,000. So this is our process, right? All of these are done in our office outside of the court, right? So this is my presentation so far. And how do you contact us? You can either, if you have any questions, feel free to email us at info@cdrag.com.my. You can give us a call as well. You can even walk into our office in Menara UA that's connected to Bangsar LRT. Or you can also get in touch in our social media, but better you can just email to us. And this is my presentation so far. Thank you. And back to you, Shane. Thank you.
All right, thank you so much, Kayin. If you have any questions, ask our speaker, Kayin. Let me just give you 1 minute to write down any question that we have before we move on to our main topic today. Well, Kayin is here. If you have any questions, ask her. You may write them down at the Q&A box. If there are any, yeah. All right, so far still no questions. All right, with that, I would like to thank Kayin for your wonderful presentation this morning. Now that we have learned more about CDRAG, in short, CDRAG offers alternative dispute resolution avenue for you to lodge any dispute with against any CDRAG members. So for claims below 250,000, so it is free. All right. So thank you so much, Kayin. Now, in investing, there are a lot of myths, right? So today, our main topic here will attempt to uncover the myth in the investing world and see whether they are based on facts or they are not. So disclaimer, whatever we share in this session is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risk. So allow me to briefly introduce our speaker today. He's an engineer come investor with over 10 years of investing experience. His style is fundamental and technical and wind rider. So what exactly is wind rider? Maybe later you can ask the speaker. So he hosted stock investment sharing sessions and investment courses in Johor, KL, and Sarawak. He is a founder of this Facebook page and blog site Wind Rider Gainvestor. All right. So without further ado, let me just invite our speaker today, Johnny.
Right.
Johnny, how are you?
Good. Shane, thanks for the invitation. Can you hear me?
Yes, I can hear you.
Yes, loud and clear. Okay, so just let me take over the screen. So I'll be sharing my screen. Okay. So good morning, everyone. Thanks, Shane. Thanks to Bursa Malaysia. Thanks to LiveChamp for inviting me for the webinar session. So I think now it's 10:22 a.m. So just want to get everyone's in the mood. So how do you feel about the stock market today? Is it going good? Is it as per what you want, or is going to the other direction? So there's a reaction at this Bursa. You can just put a thumbs up or thumbs down if there is a thumbs down. Okay. It's okay. So now today we're going to go through some of the myths and also facts in the Bursa Malaysia. There's a lot of quotes in the investing world, not only in Bursa Malaysia, even in the whole world. Okay. So uncovering the myths in our Bursa Malaysia. So this is a topic for today. So I'm gonna go through a few 5 myths that we had heard over these few years. I mean, not over the not in the few years. I mean, it had been there. So we just want to validate. When we say we want to validate these quotes or myths, we'll validate with the data that we have. Okay. So I'm gonna start with our introduction. So there are a lot of quotes and philosophies in our stock market, not only Malaysia market. Okay, we have a US market. So wherever we invest, there's always quotes and also philosophies. So sometimes there are even some exciting stories. Okay, so the stories will keep circulating every year, year in, year out. For example, we will hear the same story in the same period of time every year. Okay, sell in May and go away is the most famous. And then I think we will almost hear this quote every April or May. Okay, think most of the TV channels or radio, they will talk about this sell in May and go away. So this is an unavoidable scene that people keep on repeating and talk about it every year, year in, year out. Okay, so today we're going to analyze those quotes with data. So why do we say we validate with data? Because data speaks. Okay, history speaks. So when we support ourselves with the data, we are more convinced, so we can be able to filter out which quote actually is applicable and which are not applicable. Okay, so it's going to be a myth or a fact. Okay, so I purposely put a picture of this if those who have traveled around to Scotland. So you can see this a Loch Ness. Okay, so it's actually a can say it's a creature or water creature in the lake. So this has been a myth or a fact for a few I think for a few thousand of years. Okay, so there are also some people debunk it, say it's actually an elephant. So we never know until we have seen it with our own eyes or with a data. Okay, so okay, these are the table of myths, the table of content that we're going to go through today. So first, we're going to go through sell in May and go away. Okay, even though it rhymes, it must be true. Okay, there's always a quote says it rhymes, it must be true. Okay, so we're going to validate that. Second one is about window dressing, okay, which happens in December. Okay, and also investing is equals to gambling, and also is cut loss necessary? Okay, do we need to cut loss when there's a loss? So the last myth we're going to go through is a market crash in every 10 years. Is it true that market crash in every 10 years? Okay, so we go to the first one, which is sell in May and go away. Okay, so yep. So first myth, sell in May and go away. So there's some introduction or some definition to it, and later I'll support with the data. Okay, so what does this sell in May and go away means? In the Chinese, in the Mandarin quote, there is also another quote which is similar to this, which is about the sell in May and go away. So they say okay, I mean generally public says that the stock market were gonna fall in May, in the month of May. So they will fall even lower. I mean, fall even deeper in June and revive in July. So we're now already in August. So I have the data for this year as well. Okay. So market fall in May, even lower in June, and then revive in July. And after that, it will be a sunny day. Okay. So why investors are recommended to sell in May? So let's break down possible reasons that we have. So if you look at this for the May, okay, so it is basically reflecting past few months. Okay, so like for example, most companies are announcing their first quarter result, which is the quarter one in the month of May. So if you know that quarter one is actually January, February, March. Okay, January, February, March. So most of the companies gonna announce the quarter one result in May, because every company is given 2 months to release their quarter result. Okay, so the mood of the most investors in the month of January is still honeymoon. Okay, why I say this is because it's a new year, so everyone is still, the mood is low, so everyone is still in a honeymoon mood, and there's a lot of holidays in quarter one. Okay, for example, January we have New Year holiday, we have Chinese New Year holiday, and then February is a shorter month. It's a shorter calendar days if compared to other months. So in February, we also have Wilayah Persekutuan Day, which is a holiday in KL, and thus the Bursa is closed, and then go for March. So when when the quarter one trading days are shorter, so we are expecting the productivity to gain to be lower also. Okay, so these are some of the reasons why we think I mean public think that to sell in May. Okay, so as for my data for the sell in May and go away, the first myth and the window dressing myth, so I'm gonna analyze the data of FBMKLCI and also FBM small cap from 2010 until the recent 2023. So maybe you'll be thinking, why are we only looking at FBMKLCI and also FBM small cap? while there are other index that we can look through. Okay, so why I zoom into FBMKLCI and FBM small cap. So basically FBMKLCI contains the top 30 companies with the largest market capitalization. So we can basically say that FBMKLCI is represent the overall Malaysia economy. Okay, because every half a year, okay, they are gonna go screen through the companies in the FBMKLCI, and then they're gonna validate whether those companies are still performing or not. If they are not performing, we'll have another bigger company. We'll have another company, qualified company to replace the companies which are not deemed qualified. Okay, so they are gonna have this review session every half of the year to go through and see which companies are good, to make sure that our FBMKLCI is as per competitive as others. Okay, so next I'm going to go through the FBM small cap. So what is actually FBM small cap? It basically contains 98% of the companies in the main market. So it does not include top 100 companies in the FBMK Bursa Malaysia. So in short, FBMKLCI for me is a big companies. So small cap represents all those small companies. I mean, the share price may be range from 50 cent or 1 ringgit and above. Okay, so those are small cap companies. So why do we need to look at the market data? Why do we need to look at the market data? So market data is designed to represent the performance of companies, providing investors with a comprehensive and complete set of indexes which measure the performance of key capital and industry segments of the Malaysian and regional markets. So easy to say, layman term, market data is for us to support whatever we have quoted. Okay, so when we are discussing on something, or we are validating something, it's better that we have market data to support, so that to further convince us. Okay, so the first one, Sally, may I go away? Okay, this I haven't go through the data. This is just about we have a talk about, like I say, I'll take the data from FBMKLCI and also the small cap index. So FBMKLCI index is a representative of big cap stocks. Okay, then the small cap is representative of small cap stocks, which is above 50 cent. Okay, so first myth. So I already tabulated all the data here. So this okay, I'll tell where I get the data, or how do I get the data. So this is as for the month of May. So if you see my table here is a month of May. I have the open and close, meaning to say, when for the FBMKLCI chart, what price it opens, the price, see, if you see the open here, is basically this number here is the opening price for the month of May. And then the next one is the closing price for the month of May. So we have the data from 2010 until 2023. So it's around 13 years. Okay, so just go through one of the years. So in 2010, in May, it started off with 1344.24 points. Okay, 1003. So on the last trading day of May, for example, 31st of May, it is 1.2k, 1.2k. Okay, so the difference here is basically the closing price minus the opening price. So if you see it's a red, I put it in red, meaning to say it's a negative figure. Okay, same goes to 2011. So it's a positive, 2012 positive, positive, meaning to say the closing price of that month is higher than the opening price. Okay, so you can see for the month of May. So for this recent year, starting after 2021, it's all in red. Okay, it's all in red. So if we tabulate the data, so in this 13 years of data, we have 6 green. Okay, meaning to say 6 years of which the closing price is higher than the opening price for May. And then we have 8 years which is red. Okay, so from the data, initial data that we have gathered, we can say that for FBMKLCI, sell in May, not to say sell, I mean, for the month of May, mostly will be ended in red for our FBMKLCI. So, okay, these are the average up. The average up here means that I just take the average numbers of all the green ones divided by the whatever months, by the 6 months. So its average is 30.22. So for the down is 50.57. So if I just take this 6 and 8, Okay, for the 6 years which ends in green is basically 43%. Okay, so the probability of us for the May to be lower is 57. Okay, for the month is 57%. Okay, so this is how we evaluate the data, okay, for the month of May. So next, okay, so just a very simple one for the month of May, we have 57%, which is red. Okay, so we'll talk about for the month of June. We're going to talk about May, June, and July. Okay, so for the month of June, again, the same thing for our FBMKLCI. Okay, first, again, on the table, start from 2010 until 2023. We have the opening price, closing price, and the difference. The difference here is the closing price minus the opening price for the month of June. Okay, so for the month of June, we have 8 data, which is green, 6 data, which is red, and then the average up, average down, I think not so important for the time being. So we can say that for the month of June, 57% will be green, while 43% will be red. Okay, so for the month of July, so what about July? Okay, for the month of July, we have, wait, sorry, let me just check. Okay, so out of these 14 data that we have 64%. 64% says that it's gonna be there's some, I think there's some data wrong. Okay, so for the green ones, okay, 1 2 3 4 5 6 7, so there are basically 7 data which is green, not the 9. So sorry for the mistakes over here.
Johnny, the 2022 and 2023 is actually positive.
Yeah, it's yeah, okay, I
You
should
color
have,
it wrongly.
yeah, thanks for it, Shane. Sorry for that. Okay, so for the July, okay, 50 and 80 is green. So we can say that it's 64%, which is green, while another 36% it's a red. So yeah, thanks Shane for pointing out, meaning to say you are listening. Okay, thanks. Okay, so sorry again for the mistake. So I'm gonna put it in green later. So if we look at, okay, this the chart I take it from a Yahoo Finance. So why do we need this data? Is basically just to look at year by year, starting from 2016. Okay, so if you see 2016, it opens at this price, for example, 1006. Okay, so when it ends, when it closes on the last day of the year in 2016, so this, if it's lower than the opening price, or meaning to say the whole year will be red. So if you see for 2016, the price is like a zigzag going up and down, going up and down within the range. So the May, June, and July, okay, starting off with the May, it ends down. Then after that, it's a green, meaning to say the closing price of June is higher than the opening price of June. And then the last portion, which is green, is meaning to say the closing price of July is higher than the opening price of July. So just to be simple, it will be red, green, and also green. Okay, so for these 3 months, okay, May, June, and July. So for 2017, also the same. It will be red, red, and red. So for 2017, it's actually for these 3 months is basically red, red, red. Okay, so 2018 we have a red, red, and green. Okay, May is red, meaning to say it's drop. June also drop. July climb back up again. Okay, and then 2019 is a green, green, red. May is green going up, June going up, July going down. So for 2020, for the month of May, we're going up, a huge climb. And then for the month of June, go down. And then July, we go up. 2021 is a down, down, down. May, June, July, red, 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 down, down, and even further down. Okay, so for 2022, which is last year, so we have red, red, and also green. May, we're going down. June also going down. And then July, we're going up. Okay. And then for 2023, which is the reason which happens last few months, For the month of May, we have red. So June, we also have red. And then for the July, we have going up. If you try to relate for the month of July, we have a lot of things happening. We have a lot of announcement, I mean, from the side of our government here. So, and also there's some state election is also coming up. So there are some positivity to it. So I have a red, and also green. Okay. So we have take a look at our FBMKLCI. So now let's look at our FBM small cap, which are the small companies. So again, the same. I collect the data from 2010 until 2023, same as what we've done for FBMKLCI just now. So I have the May, the opening price, and the closing price, and also the difference. Okay, so just a first glance, if we compare to our FBMKLCI just now, for the small cap companies, for the month of May, we have 2 data green and 12 data red. So meaning to say we have 86% probability that our small cap companies will be red. So I know as a retailer or as a small investor, we tend to go and buy the stocks which is, let's say, not so expensive, maybe 50 cents and above. So from this data says that for the month of May, we have 86% that we might have a red ending. I mean, we might have a we might have a companies that we invest might give us a negative data. Okay. So for the month of June, we have 7 green and there are 7 data which is red. So we can say 50-50% for the month of June. And for the month of July, okay, if we are investing in the small cap companies, so for the month of July seems like a good buy. Okay, we have 11%, as well 11 data, which is 79%, and also 3 data, which are equivalent to 21 data, which is red. Okay, so if we are choosing into small cap companies, so if the conclusion here, if we were to combine, okay, if we were to combine, this is the percentage. This is not the data. Sorry, this is just a percentage of the data. For example, May we have it's a red. We just look at red or green. Red meaning to say it's a drop. Green is a positive figure. So if I combine FBMKLCI in terms of percentage and also FBM small cap in terms of the percentage. Okay, so we have all this data. So for the month of May, for this 14 set of data, so we have 6 green, 8 red. So same goes with June and July, and a small cap May, June, July. So if I were to combine small cap and also FBMKLCI for the month of May, so we have 72% negative. Okay, so for the month of May, whatever stock we buy, whether is it is it an index stock or is it a small cap company stock, we might have a 72% of red, of negative data, whereby the closing price is lower than the opening price. Then for the month of June, we're 54% positive. So if you buy in June, most probably you might have some profit. So for the month of July, you have 72% positive. So meaning to say, just a rough estimation. If we buy in July, we have 72% of getting profit. Okay, so based on our data that we have, sell in May and go away had been validated to be true in some sense. Okay, from our data from 2010 until 2023, sell in May might be applicable because 72% of the chances that when we buy the stock, it will be red. Okay, the closing price will be lower than the opening price. Okay, then however, with the recent COVID outbreak in 2021, it is the best time for us to invest. So there are 2 ways you can look at this data. For the month of May, we know that 72% will be making losses from the companies that we buy. So in addition to that, meaning to say, if let's say for the month of May, we buy during that time, okay, so for the month of June and July, we might be getting our profit. So we need to have a reversible thought. Okay, when people say it's a good time to buy when everyone goes to buy. So sometimes as an investor, we might need to stay away from there. When everyone is down, when everyone is like pessimistic about the market data or the condition, so it might be a good chance for us to buy. So there are two thoughts on this. So it all depends on your own thought. But then from this data that we have, sell in May, it somehow it's true, is validated that this quote is true in Malaysia. Sell in May because 72%, the chances that we buy into the stock might be negative. Okay, sell in May and go away. So the first one, we're validated with the data, says that sell in May, go away is somehow is true in some sense. Okay. Okay, next, we're going to talk about the second one, the second myth of the day, which is window dressing. Okay, window dressing. So what is actually window dressing? Okay, so window dressing is actually an activity where the fund manager pushes the price of the stock to make it look good in a financial report. Okay, for example, just a case study. Okay, the fund managers bought into the stock and then they want to make sure that their report cards is good for their client and good for the investors. So because fund managers, they have a lot of fund at the back of their in their account, so they can use the fund just to push up the stock price, and then they'll make the report card look good. Okay, so usually the fund manager will sell the stocks that are underperforming, that are not encouraging, and buy stocks that are more potential, that have more potential. Okay, so the purpose is to present to clients or shareholders that the performance of their portfolio is healthy and good. In another way, just to show that the fund managers fund stock picking skills and their analysis is good. Okay, so they can encourage more fund, they can encourage more investors to invest in their fund. Okay, so not only we can see from in the fund, we can also see in our index. Okay, so this is quite clear. This is quite clear, and especially for the window dressing, we can see we can relate strongly to our FBMKLCI at the end of the year. Okay, so similarly, let's explore in our FBMKLCI and also small cap, because now the impression that we have is window dressing normally happens in our top 30 in our FBMKLCI stocks. Let's see whether does it apply for our small cap companies also. So again, we have the data from 2010 until 2022. Why 2023 is not included inside here? Because 2023 we haven't reached to December. Okay, remember the window dressing mostly happens in the month of December. Okay, so again, take the same data. We have the opening price for December, and then this is the next column is a closing price for December. The difference is basically closing price minus off the opening price. Positive, negative, the same thing. So from these 13 years of data, window dressing, we have 10 data which is green and 3 data which is red. Okay, so meaning to say, for the month of December, the chances of the fund managers pushing it up is 77%. But for us as retail investors, if we are buying into index stocks, we have 77% of making profit. Okay, we have 77 of making profit. So for our small cap index, because just now we mentioned we have a hypothesis saying that normally fund managers, FBMKLCI, the index stocks are the one being pushed up. Okay, so if we look at our small cap, it's also the same. We can see it's the same practice also. So we have 77% up, meaning to say for us as investors is 77% of making profit. Okay, and then 23% of red, making losses. So when we are buying into the small cap companies in the month of December, we have 77% of making profit. Okay, so of course, definitely, if we take a look at the window dressing in December, so we might as well observe the performance for the month of January. Okay, so a new year, a new beginning, everyone is very happy. So while in our Malaysian stock market, okay, let's look at this data. For FBMKLCI, for the month of January, we have only 4 data which is green. Then we have 9 data which are red. So meaning to say in the month of July, 70% of our chances will be getting losses, 30% will be getting positive. So like I say just now, in the first myth, in a sell in May and go away. So normally January for me is a honeymoon year whereby people are still adjusting for the year, setting up their goals in the year. For companies that are setting up the KPIs, for retail investors like us, we are looking at the, okay, which year will this year be? Is it going to be a bull year or a bear year? Attending the seminars to look what are the views. Okay, so normally January month is a slow month for me. Okay, so we can be supported from our data here. So if we buy in the month of January, we have 70%, which we might be getting lost. Okay, so if we look at a small cap, it's quite a balance. Okay, quite a good performance for the small cap. So we're 54%, which we might get a profit from buying from the small cap companies, and 46%, which is red. Okay, so these are just some data for the month of December until December last year until January this year. So 2016, 17, okay, push up window dressing, pushing up in the January, continue to push up. Okay, 2017 and 18 also okay, also push up in the month of window dressing in December. Okay, so this for the 2018, okay, still a good year. So for the month of for the year 2018, so it's a red, and then 2019 is a red also. So 2019, 2020. So we can see from the data here, mostly for December is a window dressing whereby fund managers will push up. So which provide a good opportunity for us. Okay, for the investors if we are buying into index stocks. Okay, so again, this is the conclusion slide when I combine the small cap and also FBMKLCI. So okay, if you see here, you have I have 2 rows of year. So this is the December for 2010, and then on the right hand side we have January and also the year. So it's continuous. 2010 December is green, and then for 2011 the January is red. Okay, so it's a continuous if you read from the chart. So if I were to combine the data, so in December, if I combine FBMKLCI and also small cap, we have 73% that is positive, meaning to say in the month of December, you just close your eyes, you just choose any of the stock, you have 73% of getting positive. Okay, this is based on data. I don't say that you can really close your eyes and pick a stock and you buy. Okay, I mean, this is just from the data that we get. 73% you have chances of making profit. While for the month of January, since it's a slow month, beginning of the year, honeymoon month, so we have 58%, which is a negative. Okay, the negative is a major here. Okay, so window dressing seems to be true. Okay, from the data that we have, window dressing seems to be true, but then no matter how bad is the market perform, fund managers will try their best to produce a good report card for the KPI. Okay, fund managers will try to perform as good as possible and to showcase that their skills in the stock picking skills, and then to attract more investors. They'll say, you see, this year had been a bad year, but then this year had been a bad year, or it can be even worse, but then I am still able to help my investors, my clients to perform. So this is normally how the window dressing will happen. The fund managers will try to push it out. Okay, so however, for the month of January, from the data, the probability of fall is more than rise. Okay, so for the month of January, like we say, it's a honeymoon month. A lot of people are still setting their KPIs, setting their goals. So it's the market is slightly slow. Okay, and then example for January, there's a lot of there's a lot of holidays, Chinese New Year, New Year. Yeah, okay, so these are some of the reasons, some of our hypothesis says that why January is a slow month. Okay, so we'll go through the two sell in May, go away, and window dressing with data. Okay, just to validate back again, sell in May, go away seems to be true from our data. Window dressing in the month of December seems to be true also. So now it's just up to us as investors. How do we utilize this data and information? Okay, so next three, investing, is it same as equals to gambling? And also, is cut loss necessary and market crash in every 10 years? These are more to like psychological and also discussion topics. Okay, so there are not so much data. And okay, for the cut loss and also market crash, there will be some data for this. Okay, so next mindset, next myth, we're gonna say that the investing is it same as gambling? Okay, so I think when I started to invest, I mean, 10 years ago, there's always a quote. I think we have been watching too much of the Hong Kong dramas, and a lot of people's mindset have been saying that, hey, investing, you're just like gambling. Okay, so that's why the mindset is there that if you invest, it's similar, same like gambling. Okay, so when we talk about gambling, what is actually gambling? It's just like you go to the coin slot machine. Okay, so you have a profit and also loss. Is straightforward. Is either you make profit or you make loss. So it's 50% profit and 50% losses. So when you put the money in the slot machine, they are already decided 50% and 50%. So there's basically nothing, no knowledge or skills required when you are gambling. Okay, so it's just you have the probability is there. There's only 50% profit, 50% loss. You cannot learn from it, and you don't, there's no room for you to apply the knowledge that you have. Okay, there's no room at all. Okay, so no knowledge and no skills required. It's basically just a luck game. So there's no chance, there's no skills for you to increase the winning probability for gambling. Okay, you might have a lot. Okay, another thing, gambling that I can say is like, for example, when it goes to buy Toto or 4D, for me, for me, for for me, not to say everyone, for me, it's just like, it's just a gambling also. Is whether you pick four numbers, 4D, 6D, 12D. So it's just either you are lucky or not. Okay, so there is no chance, there is no effort, there's no skills required for you to increase the winning probability. Okay, definitely there are some analysis that people say that, oh, these four set of numbers keep on appearing as a consolation prize or top one, top two, top three. But for me, that for me is just a gambling. Okay, it's just a luck game. Okay, whereas when we are investing, it's just like we are farming, we're planting something. Okay, so when we are planting, so I normally say investing is like a farming. Okay, so there are a lot of efforts that we are doing. We are hoeing the soil, we're fertilizing, giving our plants happy nutrients. Okay, and then we removing the weeds. We remove all those weeds, dangerous things around our plants that might steal the nutrients. We remove the weeds, and then from time to time we need to rest also. Okay, and then we'll be happily harvesting the plants that we grow, and then through this process, we continue year in, year out, and then we continue to innovate. So when I talk about innovate, meaning to say we are learning new skills. And for example, as a farmer, we go and attend the conference, we go and talk to communicate with other farmers as well. We learn from them. So these are we call innovating. So as well, same goes to investing. When we're attending investment fairs, seminars, when we talk with other investors, we learn from them. We share our skills. We share, like for example, we share the websites that are useful to other investors. So we learn from each other. These are all innovating. We are learning together to enhance our skills. Okay, so you can learn many kinds of skills and techniques. Investing in knowledge pays the best interest, just like farming. Okay, you learn a lot of skills. Maybe you learn how to water, what time to water the plants. Is it morning, evening? So you have a set of data. You learn from your experience. Same goes with investing. When you try to talk to people, attending seminars, you learn a lot of skills. Okay, even by attending the webinars from LifeChamp and also Busan Malaysia, you also learn a lot from the speakers as well. Okay, so The benefits of investing, just how I mentioned, investing is same as farming. So these are basically my own personal feeling towards investing throughout my 10 years of investment. So I learned a lot of friends, meet a lot of friends. Okay, I managed to engage and also exchange ideas. So I can fully utilize the time. I remember the time when I started to work. Normally when we start to work, we have a lot of free time. Okay, morning, we have only work for 8 hours. Okay, 9 to 5. After 5, we have a lot of free time. Some people can watch videos, go hanging out with their friends. So when you are into investing, you basically avoid all those things. You try to utilize the time to read through the annual reports, quarter reports. Okay, of course, you still need to have some free time to relax with your friends, hang out with your friends. But then the time is have been utilized nicely. Okay, you learn more. Okay, by reading more. Okay, the next is you have more mature thinking. Mature thinking here means that when you try to when you are investing, when you have critical thinking, you try to think in this period of time when the market is down, how can this uh how can this industry or how can this sector continue to make money? Okay, for example, now is a El Nino period whereby the harvesting for the palm oil is low, so the palm oil price is going high for the demand and supply. Okay, when the demand is stagnant but the supply is lower, the price will go up. So we tend to have this mature thinking. I mean, just to understand the economics, why and how. Okay. Then next is to increase the knowledge. Okay, knowledge is there. So it's just up to us to grasp. So when we have all this knowledge, we can apply it in our, for example, on from our day-to-day job. If you have a career, so you can apply the skills from investing in your career also. So get to know quality friends. When I put the word quality friends here, meaning to say we can have a lot of friends, but then we only need a few of quality friends. I'm also happy that I have a few quality friends that we can share our investment thoughts together. Because normally when we talk about a stock, when we are discussing on the stocks, it is not like we sit down in the mama store and we just go everywhere. Sometimes when we talk, we will share the data. Okay, for example, my friend say, this company stock is good. So he will share the data and his thoughts. Maybe sometimes we'll open the app and look at the news together. Then he will pinpoint, you look at this sentence, you look at the annual report, you look at this piece of sentence. Those are the friends that we want. I mean, which can really share ideas instead of just telling you, this is a good stock, let's buy. Okay, we need to have people to do analysis together. I think in my life of investing, I'm happy to have such friends. Okay, so able to think critically. So I'm able to think critically. This is one of the benefits of an investment. And also the most important, we can have a passive income. Is it a dividend or the capital gain? So these are the most of the benefits of investing that we can get. I mean, that I think that I have managed to benefit from. Okay, so is investing equals to gambling? For me, it's a no. Gambling, you didn't learn anything. You only have, it's a luck game. You don't have time, you don't have chances to show off the skills that you have. For investing, you have a lot of chance to show off your analysis skills. Okay, so it's not a luck game. It's basically based on your patience and also your analysis skills. Okay, so next we're gonna go through is cut loss number the myth number 4 is cut loss necessary. Okay, so a lot of people say that I'm having loss in my stock investment, but then I'm not losing. Okay, check the sentence. I'm having loss, but I'm not losing. Because as long as I do not take profit, as long as I do not sell, even though I'm making paper loss, it's not a materialized loss. So I'm still not losing. It's just a paper loss. Okay, so is paper loss important for us? Okay, so I'm gonna go through this, the 4th myth. So not stopping loss is just like you're planting a tree that does not bear fruit. Okay, so if you're planting a tree that does not bear fruit, so you're not only wasting your money, you're also wasting your time. Whereas maybe you can use the money for something else. Maybe the easiest one, you can put the money in a fixed deposit, which you can get a 3% or 4% of the interest. which it is better than us just putting it there for not stopping loss. So if it is just that you're not trying to improve your behavior, or we are stubborn, okay? Well, I'm making loss, but it's okay. It's just a paper loss. For me, that's a stubborn, and also you're not trying on how to improve your behavior, on how on your skills. I can relate to one of my story in which in my hometown, whereby my family, we planted a durian tree. I think we planted for around like 6 months. Okay, it's really a durian tree. It's not a tree that does not bear fruit. It's definitely a durian tree because we spent some money to buy the durian tree. We plant it for around like 6 months. Then after that, the tree is not growing. It's a small tree. It is not growing. So one day, me and my family decided, because we have been giving some organic nutrients, okay, because we think that, oh, this durian later will be we're having the durian into our stomach, so we didn't get the commercial fertilizer. We're giving like nutrients, organic nutrients, enzyme, everything, okay, taking care of it properly. So but then the tree doesn't grow. So after 6 months, we decided to see, my mom decided to say, okay lah, let's not plant durian trees. It seems like it's very difficult to be planted. So let's just cabut. I mean, let's just remove the durian tree. So when we remove the durian tree, so we found out the roots already had been rotten, meaning to say, I think the soil content, the moisture content is high, and then which is not suitable for the durian. Okay, so I think that's the main reason. Maybe the soil is not suitable for us to plant a durian in our backyard. Even though we have a big land, but maybe the soil the soil is not suitable. So we never know because it is below the ground. So only when we remove it, we look at the roots, only we know that, oh, the soil is not suitable. So it's a lesson learned for us. Let's say if we want to plant another durian tree, we need to take care of the land. Okay, maybe remove the reduce the moisture content, maybe, or we can find another type of plants which is suitable in that kind of soil. So if let's say we didn't remove the durian tree, we didn't look at the roots, we never know. But we only know that when we do something, it's an aha moment when we remove the roots. Now we know why. Same goes to our investment. If we cut loss, then we will only be thinking, okay, I cut loss and I have some money. What should I do with the money? Okay. So this is a chart, have x-axis and y-axis. So the x-axis is the time. The y-axis is the price. Okay. So from 1 ringgit to 10 ringgit, it takes 900%. This is just a mathematical calculation. 10 divided by 1, 10 minus 1 divided by 1, so it's 900%. Okay, from 10 ringgit to 1 ringgit, it is negative 90%. So you must be thinking, what is this guy gonna talk about? So you imagine, from 1 to 10, you need 900%. But then from 10 to 1, you only need 90%. Okay, this is just a term of mathematics. Okay, so from 1 ringgit to 10, it requires 900%. So it only requires 90% to return to the original. Okay, from 10 ringgit to 1, you do not need 900%. You just need 90% only from 10 to 1. Okay, so let's put another analogy. So this is your car. You're driving a car. You want to go to the mountain top. Okay, so it's very rocky, it's very hard. You need to use a lot of fuel. Okay, you need 900% of the fuel and the energy to go up the mountain top. Okay, so you need to pump your oil many times at the stop. You need to accelerate every time. So it's very, very tiring. Okay, it's very, very tiring. Where else, when you're at the mountain top, when you are going down to the to the bottom of the destination, you only need 90%. Okay, so from the top going down, you don't need to press your mini up, you don't need to press your accelerator because it's a gravity, so you can just go down like that. Okay, so the car actually requires 900% of the energy to climb up the hill, but it only uses 90% to come to the bottom. Okay, I repeat again the analogy. You need 900% of the energy. You need to pump your oil, you need to press on the accelerator. You need 900% of energy to go up. But then from the mountaintop to going down, you just need 90%. You don't need to pump your oil. You just need to start your engine and then just go down through the slope to the bottom. Okay, so the importance of cut loss, what am I trying to say? This is another analogy. From 5 ringgit to 10 ringgit is a 100%, it's a 100% profit. Okay, 100%. But then from 10 ringgit to 5 ringgit is a 50%. You see the numbers from 5 to 10, from 10 to 5. So meaning to say from 5 to 10, you need 100% of the energy to go up from 5 to 10. But then from 10 to 5, you just need 50%. Okay, from 2 to 3, you need 50% of the energy. And then from 3 to 2, you only need 33%. Okay, so what am I trying to say in this picture? On the left hand side, from small figure, from a small number to a huge number, exact number, okay, we need extra energy, we need extra power. So from the right hand side, from top to the bottom, we need lesser energy. Okay, so if we do not react, we cannot save our losses. If we do not react, let's say, like we say, we plant the tree which does not bear fruit. If we do not react to it, we cannot save our losses. You see the table from the left and right, even though it's the same number, it's the same number, 5 to 10, 10 to 5, 2 to 3, 3 to 2, 1.5 to 2, 2 to 1.5, 1.1 to 1.75, 1.75 to 1. It's the same number, it's just reverse it of it. It's just a different direction. It's a completely different world. Okay, you need 100% of energy. You need more energy on the left hand side to go up. But when going down, you need lesser energy. Okay, so this is the importance of cut loss. If we do not cut loss, we will basically waste our money, waste our time. Okay. So conclusion. Okay, if let's say this is an important conclusion. So if we lost 10%, if we already lost 10% and we do not cut loss, okay, how many percent are we need to make in the next trade in order to make profit? Okay, we need 11% to salvage. Okay, if we lost 20%, we just need 25%, which for me is still doable. If let's say I cut loss, I lost a company, I lost a trade, okay, I invest wrongly, I lost in a trade, I lost making for 20%. For me to get another stock with 25%, for me is still doable. For me, it's still doable. Even though I think 25% is a bit hard, but for me, it's still doable. If I lost 30%, I need 43% to cover back my losses, which I think for me is a bit difficult in this market time. Okay, in this market time. If I lost 40%, I need 67%. Okay, do you see, like from the top to bottom, the difficulty level is going high. It's more difficult. If I lost 50%, if I do not cut loss, okay, if let's say if I cut loss, I need another 100% to cover back. Let's just go through down the table. If I lost 60%, I need 150%. If I lost 70%, okay, if I do not cut loss earlier, I need 233% to equals back to my 70% of losses. If I do not cut loss at 80%, I need 400%. Okay, last one. If I do not cut loss at 95%, I need 1009% to salvage back, to cover back my losses. Okay. So I hope this table basically reminds you, if we do not cut loss, if our loss widens, how many percent we need to salvage? For me, if I cut loss at 10%, 20%, I need 25% to salvage. For me, this 25% is still doable in this kind of market. Okay. If I lost 30%, for me, it's very, very difficult. How can I find a stock in this year which can cover back for me 43%, maybe in 1 or 2 months? It's difficult for me. Maybe there are some methods you can invest into structured warrants, but only provided if you have time for it. Okay, if we just a retail investor, whereby we cannot dedicate like 8 to 5, I mean the full time to monitor the market. So cut loss is important for us. Okay, so we need bigger profit to salvage the losses. So that's why I always tell my friends or my circle of friends, cut loss if the reason you buy is the reason you sell. For example, you want to buy due to the technical indicator. So from the technical chart, it says that you're going to be bullish. Okay. If let's say that's the reason I buy, and then let's say it doesn't materialize, whenever it's a negative 10%, we need to cut loss. We need to cut loss because the reason you buy is you are expecting a bullish, but then there's no bullish. It turns out to be coming down. At 10%, you must cut loss. And it's easier because you just need just need to spot another counter with 11% of profit to make over the losses. So I think it's doable. Okay, so from this chart, we need bigger profit to salvage losses. Okay, so is cut loss necessary? Yes, it is very necessary. It is very necessary. So I hope this table is able to able to gain some insights or able to gain some knowledge from this. This is just, you see, just now, it's just a pure mathematics only. It's just a pure mathematics from 5 to 10, 10 to 5, but then it's different direction. So this basically tells us that the importance of making of cut loss. Okay, so we're coming to the last. Okay, we're going to the last of the myth. Market crash in every 10 years. Okay, I remember when when I start investing, I just share with my friends. I say, hey, we should learn to invest. Then some of my friends says that, this is not a good time. This is not a good time. He said, oh, because the market gonna crash next year. I said, why? How do you say that? Then he said, you look at the trend, 1997, 2008, 2019. Later, you will tell me that 2029, 2028 is gonna cut losses. It's gonna be a market crash also. So what I say market crash is a good chance for us. It's a good chance for us to practice, test our patience. Okay, so is market crashing every 10 years? Is it market crashing every 10 years? So again, I'm gonna have some data with it. Okay, with the GDP data and also our market index. So everyone had a different definition of market crash. Okay, everyone definitely have a different definition. If you look into Google, you'll find different answer. So for example, for some of the technical chartists, they'll say that if the index, there's a if the, okay, for some technical chartists, they say if the simple moving average of 200 days cross over simple moving average of 50 days, that is they define as a market crash. Okay, some of the people, maybe the fundamentalists, they say if the GDP data for that year is negative, then it's a market crash. So different people had a different definition. Okay, so maybe I share with you my definition of it. Okay, so it all started with a cause. There must be a reason. It started from a reason. For example, in 1997, it started from the Thailand. Okay, then it's slowly and contagiously spreading. So there's a cause. Then the virus spread to other country, began to expand. For example, for the 2008 from the Lehman Brothers from Europe, then it start to spread. So it's slowly and contagiously spreading. How do we know that it's contagious? When it's infecting our index, when it's affecting our index? You can see our index are going down, going south, going down. Okay, so it's disrupting our GDP data, the gross domestic product. Okay, and then it's slowly affecting the lives. It reducing our job opportunities. We have affecting lives. When we read from the news, there's a lot of VSS going on. The company slash off a lot of the staff, reducing job opportunities. Okay, affecting our lives. Okay, so that is my definition of my market crash. Start with the cost, and then it's spreading, affecting our index, disrupting our GDP, reducing job opportunities, and affecting lives. Okay, I think maybe some of you can relate to this. 1997, 2008, especially in 1997, what happens? And then I think that time I was still in primary school. I remember there's a lot of things happening around me, my family, in my neighborhood. There's a lot of things happen. Okay, so it's affecting our lives at the moment. So that is what I say. There's a market crash. Okay, so I have a set of data here. So on the left and on the right, year 1997. So we have the open and close is basically for our FBMKLCI. Okay, so with the delta, which is the difference whereby the closing price minus the opening price, and then we have the GDP for that year. Okay, so yeah, 1997. So maybe can't see the 1997. Okay, let me just see. It's 7.4. Okay, so it's okay. Let me make it big. Full screen. Okay, 1997. So if you look at our index, okay, so now we just zoom at the data of our index. If it's a more than more than or less than 20%, we'll only look at all those data first. Okay, for example, 1997, okay, Asian crisis. So our index dropped from 1002 to 594. We have a loss of 52%. So if we relate this FBMKLCI movement to our GDP data, so in 19, it's okay. The charts always come first. Okay, the chart always reflect on the GDP next year. Okay, so in 1998, our GDP is negative 7.2, negative 7.2. Okay, next we look into 2008. Our index from 1004 dropped to 876 points. So it's a negative 39%. Negative 39%. On our GDP next year, it's a negative 1.7, which is not so bad, still manageable. Okay, because it only involved the banking sectors. Okay, so if we look at the, okay, so is there any still data which is negative 20%? Less than 20, no, no more. So we look at the positive ones. In 1999, okay, the stock market rebound from 576 to 812. It's an increase of 41%. So if you relate to the GDP next year in 2000, it's a positive 8.9%. Okay, then we look at 2023, 2003. Okay, from 646 to 693 is an increase of 23%. Okay, so our GDP is quite promising, it's 6.9%. So 2006 is a 22%, and then GDP is 6.3. So we have another bounce in 2007, 32%, is 4.6. So if we look at, okay, 1997, it's a huge thing from 1002 to 594. So if you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it requires around like 10 years to bounce back from 500 something to equivalent 1.2 thousand, 1200, 1002. Okay, so in 2008, basically it wiped down the whole 10 years of effort. Start from ground again. Okay, start from ground again. Then we have 2009, 45% from 878 to 1002, which is good. Okay, there's an increase of 45%. And then 2010, we have 7.3% in GDP. I think 2009 is the year that a lot of investors are actively investing, because they think whatever stock they buy, it will gonna go up. Because even the index, you have 45% of going up already. Okay, so I think that year is a good year for a lot of investors. Okay, and then recently, if you look at the last recent 10 years, there's not much significant. But not to mention, not to forget our COVID, which happens in 2020, 2021. Okay, what are the difference between 1997, 2008? Okay, for me personally, because when COVID happens, government and a lot of agencies, they are pump in money. Okay, you will see 1997 or 2008, when there's a crisis happen or market crash happens, the banks is going to inject money. The government going to inject the money to cover the losses, to balance off. So those are the actions being taken, okay, by the government, also by the banks. So The most important that we can relate, if there is a huge drop in the index, if let's say the market crash, if market crash, next few years is going to be a good year for investment. Look at 1997. Market drop, GDP is red. Next few years going to be a good year for investment. 2008. Okay, the market dropped 39%. Next few years, the market rebound back. Okay, even for our COVID also, I think it is a good benchmark. For me, it's just like it dropped to the bottom, and then that is the benchmark. So in that, if that's the benchmark, then it's easier for us to know how to go up, because that is the bottom already. That is the bottom already. We know how, for example, for the room of improvement, you drop. Okay, easiest one, there are 30 students in the class. I get 30, the position number 30. I'm the lowest, I'm the lousiest, I'm the lowest. So there's a lot of room there is a lot of room of improvement for me from 30th to 20th, 15, 10, or 1. Okay, so that's the message that I want to carry. Okay, so the fall of market is totally out of our control. We do not have a power, or we do not have the Thanos power to snap and go up. Okay, it's totally out of our control. But the most important thing is our reaction and action during and after the market crash. Okay, our reaction. What happens when market drop? Our reaction, we might be sad, we might be emo. Okay, and what's matter is our action during and after the market crash. So what are the reaction that we can have during that market crash? We can try to spot, try to see which stocks are good to buy. After that, we can buy. Okay, we spot, then we go and buy, then we keep. Okay, these are the practice that we can have. Market drop, we go and spot which are the good counters. Okay, which stocks are able to recover fast in the industry. Then we buy, then we keep. Then after the market crash, after the economy already revived, we can either harvest or we continue to keep. That's a strategy only, but then it's easier said than done. In order to spot, we need to be diligently, there's a few indicators, or there's a few criteria for us to spot in order to buy, for us to keep. Okay, definitely there are some skills or analysis that we need. Okay, so an investor should be, okay, you look at this chart, there's a x-axis and y-axis. Y-axis is the time, is a price. S-axis is the time. So whatever the chart, normally the chart will always go up. Okay, it will always go up in the long trend if we are picking the good company. So okay, for the past, we always use fundamental analysis to check the stability for the stock. Okay, so fundamental analysis for us is, for me, I can use the last 5 years data to check whether the company is stable. Is the company able to make profit every year, every 10 years, every 20 years during the market crash? Are they able to prove to me that they are consistently making money? Okay, so currently I'm going to use my technical analysis to buy and sell. If I already screen out the companies which are making profit for the last 5 years or during market crash, then for me, that's a pool of companies that I should be investing in after I have screened through. So maybe there are some companies that have been making losses for the continuously 5 years. Those are out of my radar. Okay, I'm only concentrate at company which are consistently making profit. Okay, so once I have that pool of companies, I'm gonna use my technical analysis to buy and sell. For me, my technical analysis is very simple. I only use Bollinger Band. Okay, and then I look at the technical indicators, for example, the price volume analysis, and also some technical charts, chart patterns. Is it ascending triangle? Is it an outbreak? So those are the simple things that I personally use. Okay, and for the future, so we have projection analysis, whereby we look at the market trend, and then we also use some target price calculation and also the future positioning of the market. For example, now market trend, everyone is talking about EV cars. Okay, semiconductors. I think semiconductors is already over. Okay, EV cars definitely, but then you still need a lot of chips, a lot of semiconductors in that industry. And also we look at battery sectors, because those are the trend now. Okay, but then we need to look at the position of the electric vehicle, the battery. Okay, are they still able to perform in the next market? For example, let's say if anything happened to the electronic cars battery. Okay, if something happens and they say, oh, EV is not the trend, everyone switch back to the fossil fuel car. Is it going to happen? Is that the future? How much is the probability of people switching from electric to back to fossil fuel? I think the probability is very, very less, because there's a lot of pledge about ESG also, about sustainability, fossil fuel sustainability, carbon credit, carbon fuel. If you try to connect to this, you will know that the electric vehicle is the future. Okay, and electric vehicle is the future, then you can connect back to the battery. Okay, so those are the things. Okay, so if we look at long term, market is a completely controlled by emotions. It's a fear and greed. So let's say we know this is the starting point, this is the ending point. We know that it's gonna go up one day, but then why there's up and downs in the stock market? Because the market is controlled by emotions. People are fear, people are scared, people take profit, people cut loss. They are also greed. Okay, so this is Warren Buffett says that market is controlled by emotions, especially by fear and also by greed. Okay, so when we do, so these are actually the, how do I say, it's a mindset that we have. We need to research, we need to foresight, we need to have faith. We research with our fundamental skills. We research with the fundamental skills. We check the company's balance sheet, the performance for the past 5 or 10 years. Then we foresight. Foresight meaning to say we try to predict the future. Okay, we use a technical analysis to foresight the stock price. And then once we buy the stock, we need to have faith. Faith, this one is very, very difficult. It's a not able to measure it, but then you need to have faith. For example, for some of the religion, sometimes we do not need to ask why God is like this, why God is like that. When we have faith, we just pray, we just have faith in him. Okay, same goes to the stock, same goes to our stock pick. We pick the stock, we know that is the trend, we have faith in it. Okay, unless we read some some insights or saying that, oh, the trend is wrong, it's not there. I remember just something to share about solar energy. I was get in touch with that even when I start investing in 2013, 14, 15. People are already talking about solar companies, solar generated electricity. A lot of also other companies are doing this, but then those companies are not making profit. I mean, in terms of their business and also in terms of their revenue, they are not making profit. Definitely when they're not making profit, the stock price goes down. Okay, I also fell into the trap in 2015, 2016. But then why now? People, it's the same agenda, it's still the same solar companies. But then why that time, 2015, 2016, the companies are loss making, but now those companies venture into solar are making profit. There are some gap, one is a technology back then maybe it's not so good, not so efficient, energy transition is not so high. Currently maybe the technology is more mature, more developed. Okay, so they are able to make profit. Okay, technology is definitely the first gap. Okay, maybe the second one is maybe the government policy, the whole world's future positioning, talk about sustainability. So people are more aware. Okay, when people are more aware, there's more demand to it. Okay, so this might be the two big difference. Okay, so with a logic investment sense, okay, it's just like Spider-Man, you have spider sense. In investment, we need to have our investment sense. Okay, supply and demand from our surroundings, we need to have that investment sense. So how do we come up with investment sense? Need to read more newspaper. Okay, so with a logic investment sense, if we apply good techniques, we use the compounding skills, we're utilizing the extra money, investing only with your extra money, okay, only with your extra income, sorry, only with your extra money. Okay, we learn and practice now, okay, until you found the best fit strategy for yourself. Okay, if I always say, if you are using the same technique, you apply it for 10 stocks or 10 stock picks. So if 7 of it you are bearing fruit from the same technique, so that is the strategy, you need to stick to it. Okay, there's no best strategy, there's no the best, or there's no best strategy, it's only the best fit strategy for yourself. Remember my quote, there's no best strategy, but there is a best fit strategy for yourself. Okay, so there are still a lot of myths in the stock market, so we just have to research and we need to talk to the data and figures. Okay, we talk to the data and figures, then the data and figures will talk to us. So if we need to continue to do research, engage with people, okay, connect with people to share ideas. Okay, so yep, so I think I'll go through all the 5 myths for today. So sell in May and go away, window dressing, investing equals to gambling, is the just to recap, sell in May and go away, is it applicable from our data? Yes. Okay, because May is the month of selling. I mean, the chance of uh the chance of making losses in May is there. Okay, about 72% if not mistaken. Window dressing, does it happen in December? Yes, from our data, yes. But subsequently in the month of January, the stock price is going down. Okay, the chances of us making profit in December is high. Okay, so is investing equals to gambling? No, investing in gambling is totally different game. So is cut loss necessary? Super yes, it is necessary, because we will require much more energy to salvage back the losses. Okay, is market crash in every 10 years? It doesn't matter. I know if there's market crash, then there will be a rainbow after the rain. So that's the chance for us to grab the opportunity. Okay, so yeah, so Shane, do I need to continue with the ETS or open to Q&A?
Yes, carry on with the equity trading simulator.
Okay, now we're gonna introducing the Bursa equity trading simulator. This is actually a good feature from Bursa. It for those who are new, who are not daring. Okay, those who are want to test their like investment skills or techniques. So equity trading simulator is a good chance for us to simulate. Okay, so this is the website over here. Okay, we have the website bursaacademy.bursamarketplace.com slash English slash login. So okay, let me just bring it here, my screen. Okay, so you're able to see something like this. So it's a simulator, so you just need to log in. And then you type the code. So if you look at it, it's just okay. Then you go simulator, equity simulator up here. So if you look at this platform, it's exactly the same. It's exactly the same as our usual trading platform. Okay. So before that, I'm gonna go through that today. What I'm gonna talk about on this. Okay. So okay, before I bring my slide into here, I bring the web page. So we just go through what are the features in the ETS. So just for everyone to be aware, we have up here, we call it control panel. We have the quote, watch list, stock info, chart, buy, sell, until log out. This we call the control panel. Okay. Then we also have the highlight. If you see the highlight here, we have the stock market, the performance. Is it going up or down? How many trades? How is the value? Is it how many stocks is green or red or unchanged or untraded? This is the highlight. Then we have the window. First window, second window, third window. Okay. And then we have the tab. For the main window, we can have a lot of tabs. I can also have the analysis. I can have a lot of tabs here also. Okay. So some important signs. We have the pop out, combine, full window, floating window, collapse, and also expand. Maybe these features, this size, you no need to remember. It will come to you when you apply. Okay, so later we can still apply. There's try and error also. Okay, so how to basic maneuver our trading platform. Talk about changing the layout to our preferred look, adding the stocks to our watch list, how to add in the technical indicators, buy and sell, and also a order status. Okay, so okay, I just go bring my here. Oops. So change the layout. Okay, when you log in into your ETS simulator, you can have different set of layout. So for me, this is the layout that I prefer. I have my quote screen. This is the quote screen, the big one. Okay, I can sort by volume. Okay, let's say I want to see top 30 active counters. I'll just sort by volume. So I know that from here, I know that UEMS is the heavily traded stock for today. Mudajaya, okay. And then I have the intraday chart below here. And then I have the market depth and also the order path, for example, if I want to buy. Okay, for example, now let's look at one of the furniture stock. For example, I look at Lee Hand. I can just type here, Lee Hand come out, I press enter, then I can see. So if you see this, if you see there's a color here, it's a green here, it's a green here, and also it's a green, meaning to say, oh, these are related. Whatever I click in this window, all of it will be reflected, green and green. Okay. For example, okay, another counter, I look at Penta. So this is Penta. If I see Penta, I click here, all of the data here has been changed, intraday chart, market depth, and also order path. Okay, if let's say I do not want, let's say for the intraday chart, I just want to, before I buy into Penta, I want to see how's the overall technology index. So I can just make it to group 1, which is other color. So I can type on the technology. So I can, oh, there's no, okay. For example, okay, comparable. Let's say Vitrox, I can look into Vitrox. I can, once I change the color, I can see the other stocks performance. I mean the chart inside here. So if I link it to green, which the main window is green, so I can change to green. So I can click and it will automatically reflect here, green and green. Okay, so I have watch list. Okay, watch list and equities portfolio and analysis chart. Okay, so let me just close it. And well, how do I have it inside here? Okay, so this is the main window that we have here. I have the quote screen. Okay, you can just at the symbol code, you can just click on any stock that you want. Plantation stock. Okay, so this is the watch list, stock info. Okay, I want to bring to attention to market summary. So if you look at this, when I click market summary, it basically let me know how is the FBMKLCI performance for today. Okay, for example, now the chart is okay. Remember, I said there's a few signs. If I put on this is a full screen, then it's a small screen, and then if I press this one, it will enter the tab. Okay, enter the tab. I mean the tab of my quote screen. So I can also look at the index. Okay, if you want to look at the index, for example, technology. Just now, before I want to buy into Penta, I want to see whether the technology counter is it good for us to buy today. If let's say overall technology is down, then I might avoid buying it for today. Okay, I put it into the main screen, and then I want to look into scoreboard. Scoreboard is how many downs, how many ups. Okay, from today we can know that the market seems like not performing. I mean, not active today. I mean, not to say not active, it's red today lah. Okay, it's a negative 5.99 points, 5.59 points. Okay, so we look at our order book, order status. Order status is whereby when we key in any counters, it will appear in the order book. Okay, now let's just test one. Okay, for example, let's say I would like to buy a plantation counter. Let's call Eno. Okay, let's say if I want to buy, I can just click today. Because in the simulator we're given 100k, so you can basically key in whatever you like. Okay, now let's say I want to buy this counter at now 1.3 1.32, so I can just buy, let's say 1002 counter 121200. Skip confirmation, text buy. Okay, so it will go to the order book, order status. So this is what I have queued for today. Okay, so how to know that whether it's matched? Then you can see whether it's totally matched or not around here. Okay, so you see the status is queued. So if it is filled, meaning to say we already bought the stock. Okay, so now if you want to cancel or revise or buy or sell or cancel, all this is at the right mouse click. You can either cancel or you revise or you buy or sell. Okay, so let's say I make up my mind, I want to cancel. I just press cancel. Refresh. Queue. Okay, it's okay. We go on to the next one. So okay, I want to share about how do we change the platform, change the color. Okay, analysis chart. So I maximize. Okay, maybe black color, the background is black color. How do I make it to green color, to other colors? Maybe black is because we cannot see properly, right? So I just go to properties. I just on the background, I change to white color. Okay, change to white already. So there are this line which I don't want. I can go to vertical lines, horizontal lines. I make it to yellow. Make it to white so that it's easier for me to see. I can also add in the indicator here. I just need to right click here. You select, you insert indicator. So you can have a lot of indicator that you want. For example, if you want Bollinger Bands, okay, which is already, once you click, it's already there. So let's say if you want for your RSI, relative strength index, okay, stochastic, you just click and it will appear inside here already. So it depends on what are the indicators that you like. So you can just click and it will automatically reflect it. Okay, next, for example, for Bollinger Band, if I do not want it's a 20 and 2. Let's say if I want normally I will prefer 10 and 20. You can just change it in the indicator, then you just press OK, so it becomes smaller. Okay, so there are things for you to explore. Okay, so you can just use it. And for this analysis chart, you can just browse your mouse, roll up and roll down. Okay, then you can also choose the stock from here. I mean, let's say I want to look at Penta, just click in and it'll be reflected. Okay, and then for this this analysis is actually taking from Trading View. This is another website. So if you are familiar with Trading View, then it's basically the same thing. Okay, so if okay, volume. Okay, so yep, so that's how you maneuver over the ETS. But the thing is, you log into it and then you try to play around with it. Since it's a simulator, so it doesn't involve your real money, so you can just click and play around. Okay, when you play around, then you try to when you explore, don't use the word play around. When you explore, you tend to find out more things, and if there is any question, you can just feel free to approach any one of us. I mean, drop your message in the chat box, or maybe you can also Facebook Messenger to me so that we can explore together. But basically, these are the normal things that people normally use for the trading simulator. Okay, so I think there's another 10 more minutes left. So maybe Shane, we open to Q&A.
Yes. So thank you so much, Johnny, for sharing with us, uncover the myth in the investing world. So if you have any question to ask our speaker today, you may write them in the Q&A box. Don't write them in the chat box. All right. So I think The first question is the ETS price feed real time?
Yes, it's fit to the real time.
Okay, it's real time. So
Mm.
equity trading simulator provided by Bursa Academy is as real as the real market. All right. So when you open an account in equity trading simulator, you will be given 100,000 virtual money to get started. So you can you can do trading just like how you normally do on the real market.
Mm.
Just now, Johnny, you talk about the patterns from May, June, and July. So there's one question is, how is August month fare? Like now we're in August, right? Could you share some hints?
Okay, thanks, Lim, for your question. I haven't really go into the data. But once, let's say if I have the data ready, I might have a post in my Facebook page. So maybe you can take a look from there. I think that's a very valid question because we talk about May, June, July, which is already past. So what about for the month of August, right? So yeah, Lim, thanks for your question. I'm gonna do some sort of analysis and share in my Facebook post. But I'm not able to answer you for the time being because I don't have a data, and then I'm scared I might mislead you. So I think let's wait for me to do some analysis and I'll post it in my Facebook page.
Okay, sure. I see a question from Helmi. How can we check the queue for odd lot buy and sell orders?
Or lots. Help me. Do you mean by, maybe Shane, you can help me out on this?
Sure. You see on the code screen, right?
Mm.
Yeah. Can you do you see normal bot lot? On the code screen, you see normal bot lot to the left a bit. Yeah. You see above the high, you see the close high low. Do you see a close high low?
Yep.
Above high, you click the menu, drop down menu, you click normal odd lot. The last
Normal.
item.
Mm.
Yeah, normal odd lot. Yeah, so this is the quote screen for the odd lot market. All right, so if you want to buy and sell in the odd lots, right, then you go to this market. If you want to see the queue, right, the market depth, then of course you click at the counter. Okay, for example, you click Maybank, then you see the market depth, right? You see, so there's 155 shares queuing at the big price of 8 ringgit 90 cent. There are 97 shares queuing at the ask price of 8 ringgit and 94 cent. And then after that, there are 3 more price level. Okay, so you can see 3 levels of the market data. All right, so these are all in the odd lot quantity. Okay. Right.
Thanks for that. This is the first time I explore about this odd lot market.
Yeah. So hope that answer Helmi question.
All right.
So this Bursa Academy's equity trading simulator provides all the retail investor a virtual account to trade the market without engaging in a real risk. So if you are new to the market and you want to test out how investing works, then of course you can sign up an account at Bursa Academy, and all the price fit here is real, and you have 100,000 cash, virtual cash to begin with. You can know how do you customize your trading screen, how do you configure the items, how do you place buy and sell. But the order pad here is only for day validity. The order type is only for limit order, so there's no market order or any advanced order. So you can only experiment limit order and also the day order for the validity. So then you can test out your trading strategies, see your trading strategy performance, evaluate your performance, improve your trading system before you really do it in the real investing world. So that will help us to cut short our learning curve and help us to become an informed investor without engaging in real risk. All right. Any other question from the floor?
any other questions or burning questions that you'd like to ask?
Yeah, if you see that there's a pop-up screen here, right? You can actually dock it at the any of the window here. Okay, you just drag it to the window and then you can dock it there. Okay. Yeah.
Yep.
That's how you can dock it. So you can also customize your trading screen, right? On top of that, there's 1, 2, 3, 4, 5. You can, customize your trading screen so you can fit your trading style. There's one question to ask. Johnny, what is your Facebook page name so they can follow you?
Okay, my Facebook page name is Gainvestor, Gainvestor.
Yep. So you go to facebook.com, find Gainvestor. All right.
Yep.
So today, Johnny showed us some facts and figures from historical data. So now we have learned whether some of the myth hold truth or not. All right. So thank you so much, Johnny. While we are waiting for more questions, maybe let me take over the screen for a little bit.
Yep.
So for those of you who haven't checked out Bursa Academy, Bursa Academy is a comprehensive one-stop e-learning platform that aims to provide you with a continuous and holistic learning journey. They simplified, user-friendly, accessible anywhere, anytime at your own pace. You may scan the QR code or type www.bursaacademy.bursamarketplace.com to head over there. On Bursa Academy, there are a lot of investing resources for you to access, be it in the form of articles, videos, recordings, events, coursework that you can participate. You can do a coursework. I think there's also executive program for you to do in the area of risk management in collaboration with UUM. So some of the coursework you can complete are like the course, the assessment to trade inverse and leverage ETF, LNI ETF. So if you participate in the modules, after you complete the modules and you have generated the certificate, then you'll be eligible to trade leverage and inverse ETF. So this is one of the criteria that you need to fulfill before you can trade the leverage and inverse ETF, because it is meant for all or more sophisticated investors category, because the risk is substantially higher. So that SC will require all investors to know the risk and understand the product before you are allowed to trade it. So on Bursa Academy, you can pass this assessment for you to gain the eligibility to trade this instrument. Okay, Hamida asked me this question. I joined quite late. Where can I watch the recording? You can catch the recording on our live chat YouTube channel. Anyway, tomorrow morning you'll be sent the replay link via your registered email. So no worries. So you will receive the recording link via your registered email. All right. So for our next webinar, it is titled IETF Strategi Pelaburan Semasa Ketentuan Pasaran. So if you want to learn about Sharia compliant exchange traded fund, tomorrow would be the time. All right. So it's happening on 4th of August 2023, 8:30 to 10 p.m. So the registration link I've just given you in the chat box, you may register for this session to learn and gain knowledge about Sharia compliant exchange traded funds. Of course, first of all, you understand what exactly is exchange traded funds, and then you will understand what are the lists of exchange traded funds on Bursa Malaysia that are Sharia compliant and what makes them Sharia compliant, and how do you use it to trade in a times of a volatile market. So like the title suggests, it is going to be conducted in BM. So you want to learn how do you trade, how do you invest in Sharia compliant ETF, then tomorrow evening, all right, from 8:30 to 10 p.m., 4th of August is a time that you can join in and learn from our speaker. All right. So it looks like no more question from the floor yet. So with that, I want to thank all of you here for staying tuned until the end of the webinar session. Thank you so much, Johnny, for spending your morning time with us to uncover the myth in the investing world. Hope that you guys has gained enormous value from this webinar. Then hope to see you in our next webinar. Bye, everybody.
Bye. Thanks, Shane. Thanks, everyone. Bye.